Hello there. Welcome back to grade 11 accounting. In this video, we want to look at a March 2023 question paper. And our question paper is from the province of Limpopo. So the question that I'm going to look at is the question 4 on that question paper, and it is on partnerships. And 18 minutes books of McGregor stores with partners Simon and Triggers on 10 June 2023, the end of their financial year. So all the required part complete the following ledger accounts in the general ledger. First part 4.8 12 marks. The second part appropriation account with 8 marks. So basically this is the requirement of the question. So anyone account. But basically remember we have got some balance share of profit or losses. Share of profit or loss. So the balances will be found in the appropriation and then they are transferred to the current account. So basically what it means, you cannot complete the current account and find the final balance without those balances from the appropriation. So basically the most wise idea is for you to start with the appropriation account. Then after finishing your appropriation account, you can now transfer the values of share of profits or loss to the current account. So basically, we can start on the second part whereby we start by preparing the appropriation. So we go to our answer section and we see that our appropriation is 4.2, which is year. So we are going to give our appropriation there. So remember, we have if further information that we are given, so we are supposed to go through everything. On information A, you are given a balance on 30 June 2023, unless otherwise indicated. And 30 June 2023 it's where our period is ending. That is the end of financial year 30 June 2023. And then these are the balances at the end of the period. Then you have information B, C that you need to go through before you start to answer the question. So our information is ending here. So if you go to information number B, it reads the profit and loss account reflected the net profit of 420,000. So it has a net profit of 420,500. So when it's a net profit in the appropriation, we are supposed to put it on the credit side of the appropriation. So basically, we come to the appropriation, and we are saying the figure that we have, it's what? The profit and loss. Profit and loss. And the figure that we have, it's 120,500, which is it. 420,500. So here you're saying 420,500. So basically, that's what we have. And then we try to see, we are seeing that the date is just the same. We are saying it's 30 2023. So we say come here, we can just write 2023. And we have June 30. We can just try to indicate that it's June 30. Then these are profit and loss. And we try to see in terms of other interest. Remember, on the term side, that's where we're going to put our salaries, our interest on capital. If we have got bonuses, we should put those on the debit side. So we go to the information given. So in terms of the partnership agreement are the ones that are going to lead us to our items that are going to post in the appropriation. So we go to information C, transactions relating to partners to be reflected in the partners accounts only. And then first point at the partnership agreement provided the following salaries allowances. We have got triggers 6,500 per month. So basically, this we are going to see that 6,500 multiplied by 12. 6,500 multiplied by 12, so that we are going to get 70. And then we have for Simon, we put 125,000. 125,000. So we are going to post those. Given the date, we are just using the same date whereby we are saying 2023. We are saying, and all the details, we are saying it's salary. And the one that we've just calculated is for triggers, so we can put our D, 78,000, 120,000 per annum. So we come here, we put again salary, 120,000. So we go to the next point. And the next point says interest on capital is calculated at 12% on the capital balances. Gas increased the capital by 200,000 and Simon decreased his capital by 30,000. So basically, we are just supposed to make some calculations in terms of interest on capital. So we can start with the triggers, which is. But if you go back to the statement, you'll see that it reads on 1 December 2022, triggers increased the capital by 100,000. Which means before that, it was 100,000 less. because this balance that we are given is at the end. After the 100,000, it increased. So we are saying at the beginning of the period, we have the capital balance that we have at the end minus 100,000. So we have for triggers, we've got 250,000. So we're saying at the beginning it was 250,000 that we have at the end. Then each side there minus 100,000, you need to get to 150,000. So this is what we have. So we can now make our calculation out of that, whereby we are now seeing uh, before the increase of 100,000, remember our interest is 4%, and it's 2, and then multiply by the 150,000 that we had at the beginning. And then we count the number of months that we had capital of 150. It was from beginning of the year to 1 December 2022. So beginning of the year is 1 July. Remember the year is ending 30 June, so it will be 1 July. 1 July 2022, 1 December. So you can just calculate how many months are there. So we are seeing that from 1 July, we are saying July, June, July, August, September, October count. So we have July, August, September, October, November. This one before the increase. So there you're just going to make a proportion of 5 months, whereby you're going to multiply by 5 over 12. So basically you multiply by 5 over 12. And then you make that calculation. That is before the increase. So let's try to calculate and see what do we get there. We can just use our calculators. So the answer that we are supposed to get there is 7,500. So we have 7,500. And then we don't calculate after. So we are saying 0.12. And after after the increase, it was now at 250. That was at the end, 250,000. So we multiply by 250. Whereby we are multiplied by 250,000. And then obviously the proportion of months now, remember, if you come back here, you'd see that it was increased on 1 December 2021. So number of months, we have December, January, February, March, April, May, June, and the year end. And then we want count the number of months that we have 1, 2, 3, 4, 5, 6, 7. So we have 7 months after the increase. So we come here, we multiply by 7 over 12. So I will calculate it like that. You see that the answer that we're going to get is 70,500. So to get the total now, the total interest on capital for triggers now is now 7,500 plus 17,500, and then add there you get your 35,000. So this is what we have on interest on capital triggers. But obviously we also need interest on capital on the second partner that is there, which is Simon. Then we come in. We indicate that we also want to calculate for Simon. Then try to see the conditions in which we are going to calculate. So for Simon is saying it decreased this capital by 30,000 rands. That is on 1 December. So it means the one that we have there is lesser with 30,000 that we had in the beginning. So basically, we are going to also make some calculations. So we are going to say for Simon, we had capital Simon is 150. So it's lesser with 30,000 that we had in the beginning. Since it had decreased by 30,000 to 150. So it means it was 180,000 in the beginning. So basically, we are also going to calculate it before and after. So before the decrease, it was 180,000. So the percentage is just still the same. The date is still the same. So we're saying 0.12 is or 12% times 180,000. That is before. And the number of months, we know that is 5 months. We've counted it there, and we got 5 months. We multiply by 5 over 12. So try to calculate it as such, see that the answer that we are supposed to get. We'll try to see what are we supposed to get there. So we can just try to see, let's just calculate that one and see what we get. So if you multiply then the that you're supposed to get is 9,000. And you go to the second part whereby we are saying it's now this is before the decrease, and then after the decrease, we are saying it's 0.12 times. Remember, before after it was now the balance that we have at the end, which is 150. So we come here and we multiply by 150. And obviously, after it was now 7 months, we multiply by 7/4, 10,500. So to get the total interest of capital for Simon, we are now saying 10,000 plus 10,500. We are going to get 19,500. So to get the total capital, the total interest on capital that you're going to put in the appropriation account, you're going to say interest on capital for Drinkers, which is 25,000, and then for Simon, which is 90,500. We add the two, and then we get the total. So we go to our appropriation whereby we are seeing interest on capital, and then we can try to summarize the working on top that we are adding the two whereby we're saying 25,000. That is for Drinkers, and then we add for Simon, we got 19,500. 19,500. And then if we add the two, the total that we are supposed to get there is 44,500. So we have 44,500. So this is interest. This is our interest on capital. Then we go to the next part whereby now we are going to we can just maybe. So on the next part, we are now on point which says Simon is entitled to a bonus of 25,600. So obviously we need to find out about that one. It's a bonus, and remember bonus supposed to be on the table side of the appropriation. So we're just going to say bonus Simon, then we will put on 25,600. And then here we're saying bonus. And we have 25,000. 25,600. So that's what we have on the part of our bonus. You see the next point that we have here in the question. It now says Simon took goods from stock for his personal use. The selling price of the goods were 40,520 and the cost price of sales 6,500. This transaction was not yet recorded. So these are drawings, and we don't adjust for drawings in the appropriation, so we're going to ignore it. Then we go to the last part. The remaining profit or loss is shared in the ratio of the partner's capital balance at the end of the financial year. So it means that the profit or loss that we are going to share will be we'll be using the ratio that we have for capital. For capital, we are having these balances at the end. So these are the balance that we're going to use as ratios. So it means we can now balance off our appropriation, whereby we are now adding the debits and compare the total that we get with the total of the credit. So we can see there what do we get. So you'll see that if you add the debit and the credit, you see that the total for the credit will be the greater total. So we are going to say 420,500 will come in between the double lines. Right. So having that now, we can now say if you subtract 420,500 minus all what we have on the debit side, you are going to get 147,400. So that's the figure that you are going to get, which is 147,400. So it means this is the amount that is going to be shared between the partners. So it means that's the balance that we're going to share here by saying we can just when we share the balance, we are going to transfer to the current account. So we're just going to say current account. current account, and we have the one that is going to Simon. And obviously, we also have the one for triggers. So this is what we have. So from there, we are saying 147,400. So we go back to our sharing ratio, which we are using the one for capital. Whereby we are saying 250,000, which is for triggers S2, 150,000, which is for Simon. So we've got the D and the S. So here we are saying you've got D and S. So we can just reduce this so that it goes to the lowest terms, maybe by canceling our zeros or 3 zeros here, and then it remains as 250 as to 150. So you can just calculate it like that. So the denominator obviously is going to be the total. If you say 250 plus 150, you're going to get 400. So it means for triggers, you're going then for Simon, you're going to say 150. The denominator doesn't change over 400. So basically, this is how we're going to calculate it. So we can start with triggers, whereby you're saying 250 over 400 times the amount that we got is the difference, which is 147,400. 147,400. So from that sense, we can see that from triggers, the amount that we are getting is 92,125. So here we are now saying 92,125. Then we go to the next one, which is Simon. So for Simon, we are also going to use the same denominator. So we're going to say now 150 over 400 times the amount, which is 147,400. And then we're going to get your amount is 55,275. 55,275. So this is the same amount that we're going to put here. So this is what we have on the appropriation. So it means that we finished the appropriation. So I will also need to complete our current account. So going to our current account, obviously, if you go back to the question, you'd see that it needs only current account of Simon. So let's take note of that. So we are only going to start with the opening balance of current of Simon, whereby we are given it as a Simon's balance at the beginning is 32,100, but it's a debit balance. DR means debit. So we go to the debit side. We are going to say balance. Balance BG. And the amount that we are having is 32,100. So we are saying 32,100. So from there, we are supposed also to put our date there, where we are saying it's 2022 June 1. That's where we are going to have this balance. So we are saying 2022 June 1. And then we try to see in terms of other quotas that we're supposed to put inside the current account. So on the debit side, we also have the issue of our drawings. I remember we identified drawings there. We have got drawings on item, second point from last, whereby it reads, Simon took goods from stock for his personal use, which are drawings. The selling price of the goods was 14,520, and the cost of sales was 6,500. So we are concerned with cost of sales when we are adjusting for drawings. So we're only going to take our 6,500. So this is what we have. We have 6,500. But if you go in the balance that we have at the beginning, we also have at the beginning of the question, information A, we have got drawings for Simon, which is 14,400. So it means we're going to have 14,400 that we have here as drawings. plus the additional drawings that we have, 6,000. Since we are told that it was not recorded. So 6,500 plus 14,400. Uh, and then you are going to get your answer is 20,900. So we come here, we say drawings. And to summarize the working by saying 14,400 plus 6,500. Then I will put on brackets, and then the total that we are supposed to get is 20,900. So we can also check, remember, also have interest on capital. That is only for Simon, that you're supposed to put in Simon's account. So here on the credit side, this is now 2023. 2023. And we are saying it's going to be at the end, which is June 30. So this is what we have. And then on our details, we are saying interest on capital. Interest on capital. And we calculated that interest on capital, and we got the interest on capital for interest on capital for Simon. We calculated it and we got 19,500. So remember, we calculated, so we are saying 19,500, we have it here. We have 19,500. So we are just going to put our 19,500 on the credit side. Then we go to the next part whereby we are having now another entry that applies in the current account. So we also have the issue of salary. If you come here, you would see that for Simon, we have got 125. Salary for Simon is supposed to be again for the credit side. So we are saying salary 125,000. And also we have the issue of bonus. That is, we have got the Simon is entitled to a bonus of 25,600. It also comes supposed to come on the credit side. 25,600. And then we check if you see another entry that you need to put there. So I think we finished. So we now take the figure for share of profit that we calculated in the appropriation, and it's for Simon only, which is 55,275. So it's supposed to come in. It is coming from appropriation. So we're just going to say appropriation. And we are saying the amount is 55,000. 55,275. So this is what we have. So from there, we can now be able to calculate our balancing figure for the current account. So if we add the total of the debt and the credit, you see that the credit is going to create a total with 225,375, which is also supposed to come in between the double lines on the other side, 225,375. And then we are now saying what we have on the is the total of the credit minus what we have on the debit, 225,375 minus 10,900 minus 32,100. We get a balancing figure of 172,375. 172,375. And this is going to be your balance sheet. So here we are saying balance. So we also have balance between, which is supposed to come the opposite side below the double line. So here the date will be the next date of the financial period. Remember, our financial period is ending end of June. So the next date will be 2023, July 1. And it's going to be your balance your balance PG. So the amount that we have is 172,375. So this is the last part that we needed to complete according to this question. So obviously, we have seen that we have completed our appropriation account, and also we've completed our current account. This is for Simon in particular.